think it was the right thing to do, given the technical factors that had arisen in the market, and it's obviously brought some important stability to the gilt market. It does not resolve any of the fundamental contradictions in British policy.
Former U.S. Treasury Secretary Larry Summers there weighing in after the BOE's intervention. Let's now get to some of our top stories with the Bloomberg First Word News is Leanne Gerrans. Good morning, Leanne.
Hi, Danny. The European Union has proposed a new package of sanctions on Moscow that would ban European companies from shipping Russian oil to third countries above an internationally set price cap. Commission President Ursula von der Leyen says the EU is determined to make the Kremlin pay for the further escalation of the war. The CEO of Ukraine's state-owned energy company has told Bloomberg TV the risks of an attack on the country's gas transit network have increased dramatically.
The reason why we're continuing transit is not because we want to continue getting revenues from transit, but it's because our European partners are saying that, at least for the time being, they need this gas and they depend on it, and they want Russia to prove that they're not a reliable supplier, not Ukraine to stop the transit. That's why we're continuing transit. And we are going to continue transit at least when it's still technically possible. And despite the war, despite the hostilities, we prove to everybody that we are a reliable transit country.
Now, Hurricane Ian has hit southwest Florida with a massive and deadly surge of water and catastrophic winds. More than 2 million people have been ordered to flee in what could be one of the costliest storms in U.S. history. Nearly all of Florida, home to 21 million people, is braced for widespread blackouts and floods. Pakistan's foreign minister says his country will need to revisit an IMF package signed last month because of the financial toll from recent floods. Bilal Bhutto Zahari renewed his call for debt relief, saying the damage is expected to exceed $30 billion. He also warned of looming food crisis due to the flooding and the war in Ukraine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thank you very much. Now, coming up, we're going to be speaking to the Volkswagen CFO, Arno Antlitz, as Porsche begins trading on the Frankfurt Stock Exchange, getting a little bit of that IPO pop amid an otherwise ugly trading day. This is Bloomberg. The BOE bounce fades. Global stock rally from bonds ignited by the Bank of England. That starts to fizzle as European equities and treasuries decline. The credibility question, the UK government steps up its efforts to build confidence after its disastrous mini-budget, but there's no U-turn in sight. The pound rebound snaps. Plus, turbocharged Porsche starts trading higher as part of the biggest European IPO in a decade. Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. So Porsche started its first day of trading on the Frankfurt Stock Exchange and one of Europe's biggest debuts in a decade. Shares now higher by nearly 2%, even after parent company Volkswagen set a top price. Let's go out to Frankfurt, where Tom McKenzie is at the stock exchange, joined by someone who will be watching that IPO price action very closely. Tom.
Yeah, like a hawk, and they're buoyant, the view here and the mood amongst the executives of VW and Porsche. Very pleased to say, Danny, that I'm joined by the CFO, Arno Antlitz, of Volkswagen Group. Congratulations on the IPO today. A key question for many people outside of Frankfurt today will be why? Why choose this moment amid all that market volatility to list this business?
Look, first and foremost, I must say we're very happy to stand here today. We've taken Porsche successfully public. And I must also say we were always positive, we were always optimistic. Porsche is a brand of its own. It's a fantastic brand. It has a long track record of delivering. It has very solid financial. You have a very, very positive and exciting future, a clear strategy, a great management team. So we were quite optimistic and quite sure that we can prove successful today. and success proved us right.
And that success has led to a market valuation for Porsche of about 75 billion euros. The market valuation for Volkswagen Group is about 85 billion or thereabouts. The gap isn't huge. So how do you convince investors to invest in Volkswagen versus Porsche? How do you create that additional value for Volkswagen?
Look, also on a Volkswagen Group level, we have a very convincing strategy towards electrification and digitalization. We have a challenging plan to achieve 25% of our sales of better electric cars in 2025 and 50% in 2030. We invest in our own battery capacity, in our battery technology. We want to build, in Europe alone, 6 battery plants to make sure that we have a secure and efficient supply of batteries. We have a convincing strategy in terms of software, and we are quite optimistic once we get proof point by proof point that we can also convince the market that it's also a good idea to invest in Volkswagen AG.
Okay, and you've raised 9.4 billion euros. Part of that will go towards the dividend, the special dividend, and a big chunk, of course, going towards electrification and software, as you said. Can you give us a little bit more granular detail as to exactly where you're going to be directing those funds across the portfolio of VW brands?
No, this is right. We want to reserve these funds really for investing into our future of electrification and digitalization. As said, we want to specifically reserve that fund for investing in our battery capacity in Europe, but potentially also in the US. We build up 6 factories there, but we also invest along the value chain upstream in raw materials, in cathode production, and this is one of the fields we want to invest at. We will invest it also in software, and another field is also charging infrastructure. You're aware we are building up right now one of the biggest charging networks in the US, and we invest also in charging infrastructure in Europe. So these are examples for the fields these funds are basically reserved for.
You talk about capacity. Your biggest factory is running at about, 50% capacity. When do you get back to kind of pre-pandemic levels, almost full capacity for factories like that one? What are you starting to see?
Look, we have to look at that from 2 angles. First is supply, and currently we are still limited by the supply of semiconductors. We see a better situation in the fourth quarter and also next year, but from today's perspective, until at least end of next year, there will be a limited supply of semiconductors. On the other hand, we increased our fixed costs, we decreased our fixed costs, we decreased our capacity, and that made us much more robust. We compared the fixed costs versus 2019 we reduced the fixed costs versus 2019 by 4 billion euros, and basically these 2 effects together will make us much more robust, and we showed the robustness already in the past.
What other steps are you taking to improve cash generation for the business?
First and foremost, I said it's on the fixed cost side, but also on the revenue side. We increased margins, we increased revenues per car. Customers are ordering better equipped cars from higher segments. So these are 2 potential effects we work on.
What about euro-denominated bonds? You're one of the biggest issuers of euro-denominated bonds. Are you comfortable to continuing issuing in this market environment?
Refinancing is one of our competitive advantages, one of our strengths. So this is also a pillar.
So you'll continue to tap the markets, you'll continue to issue?
We will have to decide on that.
Okay. You talked about batteries. You have PowerCo, which is a big part of that push and that effort to build out battery infrastructure. Can you update us on the IPO plans for that part of the business?
Yeah, as you said, or as I said before, there's a huge investment in that field to do. 20 billion plus in the factories, another 10 billion. And we don't want to have do all these investments by ourselves. We will look for strategic partners, potentially from next year onwards, and potentially also in the future. We don't rule out even an IPO on the battery side.
Possibly an IPO of PowerCo next year?
IPO of PowerCo next year would be much too early. Okay. Next year we will start looking for strategic investors. IPO rather later on, but the funds or the proceeds we just received from the Porsche IPO will give us much more flexibility to finance it by ourselves a little bit longer and then potentially IPO it a little bit later.
Okay. What is the resilience of the business facing the headwinds that is the energy crisis here in Germany and across Europe?
As discussed, we showed a lot of resilience in the past. Specifically, for example, in last half year, there were a lot of challenges by COVID in China, semiconductor shortage of wiring harness, and despite that, we proved rather resilient and delivered decent results.
No, do you expect to see any shutdowns at all this winter?
We basically look closely into that topic as well. We have a program to reduce, for example, our gas demand. Factory by factory, we will reduce the temperature in the plants, in the offices. And so there are a lot of measures in place, so we don't expect for Volkswagen any shortages from today's perspective.
Arno Antlitz, thank you very much indeed. The CFO of the Volkswagen Group there, giving his views on what to look ahead for as well as this company enjoys the success of this IPO, maybe looks to spin out the battery part of his business. And we were speaking to the CEO earlier about potentially Lamborghini as well. He didn't push back on the idea, the CEO, that could be also a unit that they spin out. Back to you, Danny.
All right, Tom, thank you so much. Fantastic conversation. Bloomberg's Tom McKenzie there in Frankfurt. I'm sure a very happy man the CFO is, considering Porsche now up 2.6% in its debut. All right, let's get to the Bloomberg Business Flash. With that is Leanne Gerrans. Hi, Leanne.
Hi, Danny. H&M says it will cut costs by $180 million a year after earnings slumped at the lowest cost clothes retailer. Adjusted operating profit in the latest quarter came in well below estimates on higher garment and transport costs and following the Swedish company's exit from Russia. Now, Amazon has announced a pay rise for hourly staff over in the US. It says the average starting wage for most frontline workers in warehousing and transportation will increase to more than $19 an hour, a move costing about $1 billion a year. Earlier, Bloomberg reported that Amazon is encouraging some US call center staff to work from home in order to cut costs. Turkish President Recep Tayyip Erdogan has called for interest rates to be cut to single digits by the end of the year. Rates have already been lowered to 12%, but Erdogan told CNN Turk TV to expect even further cuts. The Turkish leader has long insisted that higher rates bring down inflation, which is currently above 80% in Turkey. And Total Energies may sell part of its 20% stake in Adani Green Energy. That stake was worth about $10 billion at the end of August. CEO Patrick Pouyanné says its holding in the company is a source of potential cash and its balance sheet is indeed safe. And that's your Bloomberg Business Flash. Danny.
Leanne, thank you so much. Now, coming up, what happens to UK deal making when we look at a weaker pound? Are there more buying opportunities? What about the entirety of Europe? What does the deal picture look like? We're going to be speaking to Adarsh Sharma from Warburg Pincus after the break. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. It's the early edition. I'm Danny Berger in London. Well, let's focus in on private equity. And the industry is, of course, under pressure, as every financial industry is in this current climate. We have banks looking at struggling funding and, of course, borrowing costs on the rise. But where are the opportunities? Is it perhaps in the UK with a weakening pound? Well, I'm pleased to say we are joined by Warburg Pincus co-head of Europe. It is Adarsh Sharma. Thank you so much for joining us today. So, I mean, look, it has been a very wild week, especially here in the UK. You get financial markets, a rupture there, concerns about fiscal policy. Has anything changed for you for investing in the UK?
Nice to see you, Danny. It's interesting that we talked last time. It was a different crisis in 2021. At the beginning, we were both sitting in lockdown. And I think in 2023, if we're talking at the end of the 2023, we'll be talking about a different crisis. Short term, I think there will be a lot of uncertainty. There will be a lot of noise. You know, we are long-term investors, so we focus on the long term. We focus on building and scaling companies for the long term. We obviously take in what is happening in the short term into our mindsets as we plan for that, but it's really long term. And Warburg Pincus has built and scaled about 1,000 companies since our founding in 1966. And we're always looking for entrepreneurial management teams that we can actually back, even in these uncertain times, to create sort of the next category leaders. I'll give you a little bit of perspective on how we do that. One, we sort of think about the micro, not the macro. So we're looking to back sort of high quality companies in that environment, long secular trends. Even if the trend lines are a little bit deflated for the moment, the trend lines will come back. Second, partnering with best-in-class management teams. I think leadership in these tumultuous times is very important. And third, we adopt a mindset, at least in Europe, of paranoid optimism.
I love that phrase. I do want to get into that, but just quickly, if I can just linger on the UK question for one moment. I mean, if you are focused on the long term, and these are perhaps short-term fissures, do you say equities look cheaper? Perhaps there's opportunities to jump in, to buy, especially with a weaker pound?
Yeah, we're not buying public companies in sort of small pieces. The take private of public companies, whether it's the US or Europe and the UK, those opportunities actually do look interesting. And where private capital can step in because public capital is not available to these companies for growth, we're absolutely looking at those opportunities.
So paranoid optimism, what does it mean?
Two parts to it. One, paranoia, we sort of think about the risks. We think about what the solutions and mitigations are. And if the solution mitigations actually don't deliver a sort of an answer to us, if it's a bump in the road, great. If it's a chasm, we wait. So that's sort of really how we think about paranoid optimism. And the one thing I'd just say is, human ingenuity, you can't sort of underestimate it. It's helped us get through past crises, and it will again this time.
We are in this period now where interest rates across the world are on the raise. The era of cheap money is over. To what degree does this change the industry of private equity, where many folks, to use perhaps not the kindest of words, we're doing financial engineering? Is that model now over and done with in the industry?
I think the industry's changed a lot. If you looked at private equity over the years, the industry has become much more about value creation in its companies. And for us, more than a third of our companies don't have debt. If you looked at our sort of 200 plus companies, we'd say we're under 3 times levered in our portfolio, which sort of says that, growth investing is a skill set that's different from financial engineering. It will have an impact, but the other impact is, I think valuations will start coming down.
Have they started to come down yet? What does it look like at the moment?
No, I mean, A companies still get the same top valuation. We're looking at it, and sellers don't have any urgency to sell if they don't get the A valuations. We sold a couple of companies this summer after a 5-7-year hold, and we got the same prices we had expected a couple of years ago.
That's really interesting, this idea that people don't perhaps want to sell at this moment, because then you have to crystallize some pretty significant losses. So what does the deal market look like then?
The deal market has slowed. And so what's happened is a lot of new types of capital have also come in. Sovereign wealth funds, large family offices, the limited partners that invest in us have also become GPs. They've become sort of direct partners with us, which is actually a really nice evolution in the industry. We like showing co-investment opportunities to our limited partners. We partner with them to buy things. What that means is some of our companies, we do a minority sale. So, we want to hold it, but we do need to return capital to our investors. So we'll do a small minority sale. We'll hold it for a little bit longer period of time, and then do a majority trade when the timing is right. So there's a lot of different ways in which we can manage our companies, no different than public markets. It's just that the public market environment has become much more of a private capital mindset.
Are you doing the flip side, or are you taking more minority stakes as well then?
Yes, we are. So, we have had flexible capital since the beginning when we started in 1966. About half our investments are majority, the other half are minority.
Okay. So then you're looking in sort of the exit environment. There's also been not many IPOs, which is maybe even kind to say as well. But we did see Porsche's IPO today. We saw shares rise 2%. Do you look at something like that and say, okay, perhaps the IPO market is on its way to get back on track? What are your expectations?
I think the IPO market is going to come back, but it's going to be a while. I think until the noise in the market sort of goes away, I don't think people are willing to come to the IPO markets unless they have a real liquidity crunch, because if the shares start trading underwater from day one, that's a bad place to be. Now Porsche is a very large company. It's a great brand. It's well recognized. And we're delighted that Porsche IPO is off to a good start, and we hope it stays there. But in general, I think the IPO markets will be slow for a bit of time. And, for private equity, actually that presents an opportunity because these companies still will need capital. And we can step in and provide the capital in a flexible mindset and have growth orientation towards it, all of which will work well for us.
So, I mean, it definitely is a complicated environment to invest in, is what I'm getting from you. But there are opportunities. I do wonder, though, if when we look back at perhaps the last era of private equity, if you will, before interest rates started rising, before we saw ruptures in this market, was there a degree of private equity just being too easy?
You know, if I could tell you that every day I went to work and worked with my companies and tried different things and it was easy, that'd be great.
Did not mean to say that your job was easy, to be clear.
No, I know. I'm just joking. I think the value creation part of what we do is actually differentiating the private equity industry. So the private equity industry has matured. It's become very large. I think there have been some that have sort of gotten away with a little bit of easy capital. But I think most generally, private equity is really focused on, you know, really creating value, being decisive with its companies, finding the best management teams, and not being short-term in orientation. And I think that's going to continue. As an industry, the industry is still a tiny fraction, a couple of percentage points of the overall liquid and illiquid assets. So I think there is real opportunity for that.
Of course, when I think of Warburg Pincus, I do think of tech. I mean, obviously, you're giants in this space, sort of distinguishing between the tech, because you look at consumer tech, maybe the Apples of the world under pressure, chips, it's a whole other hotbed. Where do you focus in on to say, okay, going forward in tech, this is where the opportunity set lays?
There are a couple of areas we're focused on. One is, if you sort of think about what happened in COVID, education has had a void, and the K-12 and even higher education. So we are focused on education services, education tech, supply chain software, compliance, visibility. It used to be, you know, in business school you learned, I just need just in time, and I need one supplier who's going to do it, and that one supplier ends up from China. Today, that doesn't work. You need a mix of local and international suppliers, so supply chain software. Digitalization is becoming much more of an important focus for companies. AI enablement, not the selling of AI, but AI enablement to do things like know your customer, anti-money laundering, fraud, all of that stuff is becoming important. And lastly, data management. I think data, there's so much data out there, but how is that data actually going to help you make better decisions in what you do? We've invested in a company recently called Informa Pharma. We actually carved it out from Informa PLC. And it provides intelligent data to the ecosystem of pharma and biotech to help get medicines and drugs quickly into the patient's hand. That's the kind of stuff that we're looking at investing in this environment.
Okay, Adarsh, I'm afraid we're out of time, but thanks so much for joining us. Thank you for sharing a slice of your paranoid optimism with us. That's Adarsh Sharma, co-head of the European business at Warburg Pincus. Now, coming up, we're going to circle back to the UK story with the government seeking to rebuild credibility as its mini budget causes investor backlash. More on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Let's get back to our markets conversation. Joining us now is Irene Garcia Perez from our markets team. So, look, the trend resumes, right? Bonds sell off, pound is weaker, dollar is stronger. Yesterday, having the BOE step in, did anything change for this market?
Shortly. It was definitely short-lived. This morning is like investors digested the news. Everyone knows the BOE action is going to last for a month or so. Had to step in to basically bail out UK pension funds. But this is going to end, and it's going to end soon, and the economic policy in the UK is going to remain, and it looks bad for inflation.
So what, we just get the bond vigilantes coming back in, just testing the BOE again?
It looks like it, and again, the expectation is the BOE raising rates. This is going to well, tame inflation, but at the same time hurt in other aspects like mortgages. We were seeing the yield on the 2-year interest rate swaps, for instance, which is used to price mortgages, at the highest since 2008. which, is going to hurt for UK consumers.
Yeah, especially if the BOE is going to hike 150 basis points. That's what the market is pricing, and you'd assume that would be really, really painful. So definitely have heard some questions about whether or not they can actually go through with that. Irene, I'm afraid we're out of time. Thanks so much for joining us. Irene Garcia-Perez there, helping us wrap up the market conversation for the hour. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz are out of New York. Anna Edwards in London. As equities resume their slide after the BOE stepped in yesterday, you're looking at yields pushing higher throughout the UK, throughout global bond markets as well. This is Bloomberg.
Investors are becoming increasingly concerned about, not just the U.S. economic outlook, but the global outlook.
The dollar and is really the dominant story behind a lot of what's going on here.
Some stabilization for the markets would be a good thing.
Governments, central banks are going to try all kinds of things we've not seen for a long, long time.
We're seeing chaos in the markets. We're seeing, the economics of pandemonium.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. British Prime Minister Liz Truss stands by the tax cuts, saying urgent action was needed to get the economy going. Now the question is whether her government can restore credibility with investors. Porsche goes public. Shares of the sports car maker begin trading after Europe's biggest IPO in a decade. And Hurricane Ian weakens after pummeling Florida with catastrophic winds and a deadly storm surge. It's one of the costliest storms in U.S. history. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Well, help from the Bank of England in terms of global risk sentiment didn't last too long, did it, Kailey? We're back to those losing ways.
Yeah, it didn't last long at all. It only lasted about a day, and you're already seeing, again, equities down and yields up. So it was a very short-lived move off the back of that bond buying announcement from the Bank of England. I will say in Asia, we did see some follow-through to what we saw in Western markets yesterday, in that actually bond yields were going up in places like Australia. The 10-year yield was up down about 16 basis points to 3.93%. But of course, yields in Western markets heading back in the upward direction today. In terms of equity markets, it really was mixed. The MSCI Asia Pacific Index as a whole was up about 0.2%. Part of that due to strength in Japan, but you did have weakness in other markets like Hong Kong. The Hang Seng Index actually falling to its lowest level since 2011, and the Hang Seng Tech Index in particular, full of those big Chinese technology stocks, fell about 1.2%. It actually touched its lowest level since its inception in 2020. Finally, in foreign exchange, it once again is a story of dollar strength today and weakness of other currencies, including the Chinese yuan, weaker against the dollar by 0.5%. The offshore yuan right now at 719.94 at the moment. So again, we're talking about record weakness, Matt, for the offshore yuan.
Yeah, definitely currencies still front and center here, as are yields. As a result of those two moves, we see futures coming back down. Yesterday was a big rally, gaining 2%, back up over 3,700 on the S&P. And today, at least now, 4.5 hours away from the opening bell, it looks like traders are fading that. Take a look at the 10-year yield coming back up right now, 11 basis points, 384. So still not back to the levels that we saw overnight yesterday, over 4%, but we're getting closer. And maybe as the Bank of England effect wears off in the UK gilt market, we'll see yields float back up here as well as in the UK. So keep an eye on that. The Bloomberg Dollar Index at 1347, 1348 right now. Not at a record high, but climbing back towards it once again, very close. And NYMEX crude coming down about 1%, $81.36 for Texas Intermediate. Anna, what do you see in terms of the euro area?
Yeah, let's have a look at what's happening here in Europe. And I'll start with the euro area and confidence, economic confidence, falling to 93.7. That is the lowest since 2020. Doesn't seem like long ago, does it? But boy, it's been a busy 2 years. So the weakest confidence for consumers in the Eurozone since the pandemic. That in itself is interesting. Possibly doesn't tell us anything new. We anticipated that was happening. It was the inflation data out of one region of Germany that really reminded the markets of, hang on a second, before the BOE acted, what were we worried about? Inflation. That inflation data from North Rhine-Westphalia, double digit. We get the German data later on today, so the market's back laser focused on the inflation problem as we were, as we have been for weeks, for months perhaps. So European equity markets selling off as a result. Now, Matt is going to jump to my rescue and tell me what all of these letters stand for. But this is the important bit you need to know on the macro front today. This is the IPO of Porsche. There's a stock listing today, one of Europe's largest IPOs, up by 3.9% on the day. Not a bad performance at all, considering the backdrop for this business, standing aside from broader consumer trends. I guess we can say that about the luxury car maker P911, the very nice ticker on Porsche.
Very
now,
cool.
next, a retailer in the UK, down by 7.9%. They're warning about the weakness in the pound. H&M warning about the strength in the dollar. This currency story is starting to hit retailers here in Europe. The pound down by 0.7%. Liz Truss has been out on local radio stations around the UK today, doubling down really on her economic strategy, saying it's the right policy choice for Britain at this point. That's her view. The pound is weaker than it was yesterday, but still stronger than it was on Monday, 108.11, but down compared to the close last night. The UK 10-year yield, and Matt was talking about the impact and whether we'd see it fade of what the Bank of England is doing. Of course, that policy intervention carries on at the longest end of the curve until the middle of October or so. But we have seen a move higher in yield, not up to 4.5%. That's where we got to yesterday, north of 4.5%, in fact, at the time when the Bank of England decided to intervene, and over 5% on the 30-year. But that's where we are. We are seeing some movement higher once again in those yields as we go back to worrying about the inflation story. Bloomberg's Lizzie Burden, with that in mind, is outside the Bank of England. Lizzie, we've heard now from the government. We've heard from the Prime Minister doubling down. What's next for the central bank?
This was a financial policy intervention, not a monetary policy intervention. Of course, the intention was to stop the gilt market spiralling out of control. But you've also had the chief economist, Hugh Pill, saying that we're going to have a significant move in terms of interest rate rises. And so at this point, the Bank of England looks like it's confused in terms of its quantitative policy, but also beholden to the fiscal policy of the government.
Well, on the subject of the government, which Anna was just talking about, the doubling down, where exactly does this leave Liz Truss? How much pressure is there on here to pivot?
Massive pressure. So Liz Truss, as you say, has been out on local radio. The audience of local radio tends to be older, so she's preaching to the choir here. She's dodging the difficult questions from the financial journalists. But her message is that the tax cuts are going to grow the economy. She's really digging in here. There's lots of pressure on her to sack her Chancellor Kwasi Kwarteng, make him a sacrificial lamb. But they're close friends as well as political soulmates, so it looks hugely unlikely. It'd be a big humiliation for her, and it wouldn't make much of a difference in terms of policy. It doesn't look like she's going to U-turn on the tax cuts, and so what does look likely is that she's going to have to rein in the spending to try and restore fiscal credibility. You've even had the former Governor of the Bank of England, Mark Carney, saying that the government's undermining the UK economic institutions, but it's going to be completely politically unpalatable to be cutting spending in a cost of living crisis. So ultimately, Liz Truss said she wanted to take on the economic orthodoxy at the Treasury. What she's facing now is the reality in the markets.
All right, Lizzie, thanks very much. Lizzie Burden there reporting from outside the Bank of England. Now, Porsche is trading on the Frankfurt Stock Exchange in one of Europe's biggest debuts in a decade. Shares opened slightly higher even after parent company Volkswagen set a top price. Lutz Meschke, chief financial officer at Porsche, spoke with Bloomberg's Tom McKenzie earlier.
We were always very strong when it comes to crisis situations, and also in the first half 2022 we had a lot of overlapping crises, Ukraine war, the semiconductor shortage, wire harnesses shortage, and we were able to further increase our net profitability margin and also our net cash flow. That means Porsche is a very resilient company, and therefore we are quite confident to meet our forecast figures.
Tom McKenzie joins us now from outside the Frankfurt Stock Exchange. So, Tom, what does this IPO mean for Porsche and Volkswagen? What's the big picture here?
Well, Matt, I know this is hallowed ground. I feel like there's some imposter syndrome going on because I know this is an area and this is turf that you know very well indeed, and a company that you have followed through the years. So you will know this is historic for Porsche and VW. As we've said in the headlines, the largest IPO in at least a decade for Europe, one of the top 5 ever in history. So they've raised, the market value is about 75 billion. The shares, as you say, popped a little above the top end of the market price. 82.50 is how they priced it. We're above that now in trading. They've raised about 9.4 billion. Their group, the VW group, are going to be putting a lot of that towards electrification, software, digitization. The Porsche family, interestingly, are now back with a significant stake in Porsche, 25%, with blocking rights as well. There are concerns about governance because you have the CEO of Volkswagen, who's also the CEO of Porsche. Question marks about just how independent this company will be. They've set themselves, Matt, a target of about 39 billion euros of revenue this year. The CFO saying he's confident they can continue to meet that. And of course, question marks as well around how aggressively they're going to electrify the brands, particularly the SUVs. So yes, P911 is the ticker, and they issued 911 million shares. Anna.
Yeah, very nice ticker. What does this tell us about the European IPO market, European IPO activity, Tom? Is this a real turnaround, or is this just a standalone Porsche exclusive?
Yeah, I'm not sure if it's exclusive to Porsche. Berenberg put out a note saying that certainly their expectation is that really IPOs in Europe aren't going to pick up until the first quarter of next year. But it will be those companies like Porsche that have that mature business background and that have profitability that can still tap into these markets and do well. And we're seeing that reaction from Porsche today. Eni is one European company to watch. They may be spinning out part of their renewables business later this year. ThyssenKrupp also have a unit that maybe they will look to IPO as well. The context is, Anna, that you've seen an 80% reduction in terms of IPOs year to August this year versus last year. And raising about 10 billion euros. So significantly down on the previous year. This has brought in an additional 9.4 billion. It's almost doubled that. So will it mark a big turnaround? I don't think so, but there may be a few other companies that look maybe to tap the markets, again, if they have that profitability that they can prove.
All right, Tom, thanks very much. I am indeed jealous, but I'm glad to have this story in your trustworthy hands. Bloomberg's Tom McKenzie there outside the Frankfurt Stock Exchange at the historic IPO of Porsche shares. We're going to have more of Tom's interview with the Chief Financial Officer, Lutz Meschke, later on in this hour, and I think that's one that investors are really going to want to listen to. Now, let's get to some more general news in the U.S. Hurricane Ian has weakened to a tropical storm, thankfully, according to the U.S. National Hurricane Center. About 2.3 million homes in Florida still without power. When the damages are added up, it's expected to be one of the costliest storms in U.S. history. Bloomberg Kriti Gupta joins us now for more. So, Kriti, what do we know?
So it is a tropical storm now, but it's still extremely dangerous. The types of storm surges that you're seeing, a lot of the damage has already been done for a lot of industries. Let me walk you through the numbers here, starting with the property insurance industry. Get this, $20 to $40 billion in claims. It could be one of the costliest for this industry. And remember, it's used to hurricanes, especially in Florida, but this one especially hurting that specific area. And now, of course, the demand picture is crucial as well. Florida is the fourth largest state economy in the United States. It's also the fourth largest in terms of driving demand, gasoline demand, and that's going to be really crucial as well. This idea here that if you are actually losing some of the demand, people evacuating, people perhaps not driving their cars because of the storm, that's going to hit oil demand as well. The question is for how long, especially as a lot of places in that area are still closed for another week or so as the tropical storm pushes through. The other one, Matt's going to love this, a Trading Spaces reference, orange juice futures.
Trading Places is the name of the class.
Trading Places. I'm so
Good
sorry.
effort, Kriti.
I tried.
Oh.
I really did try.
Oh my goodness.
I should get a trophy for trying. Trading Spaces is a show on HGTV, which I also loved, I have to point out. Nevertheless, up about 15% on orange juice futures because 90% of the U.S. orange juice crop is right there in Florida. So you do see a little bit of pain there as well. I'm going to leave you with one last one, Mosaic, the fertilizer company. A lot of their operations are there where they turn that crop into fertilizer. All of that is in Hurricane Ian's path.
It throws just the right amount of shade on Matt, though, Kriti, if you get the name wrong. What about stock market impact then? We talked about commodities. What about the stock markets?
Well, when we're talking about individual movers, Mosaic is the one you really want to keep an eye on. Bloomberg Intelligence saying that they could see as much of third quarter revenue fall by 240 million to 300 million. So once again, a lot of pain for Mosaic, specifically because not only are their phosphate rock assets there, essentially that's where they mine a lot of it, but also because this is coming off of a lot of the pain that they're dealing with from the natural gas demand. Think about this, the war in Ukraine affecting the fertilizer crop because you need natural gas to make that change. So right now, Mosaic is the one you want to keep an eye on, as well as, of course, some of those oil stocks and oil demand, as well as the pain in refineries.
All right, Bloomberg's Kriti Gupta not making me ultra optimistic about the flight I'm supposed to take to Miami tomorrow, but we'll leave it at that. Thank you so much. Now, Kriti was talking about some of the stocks moving due to Tropical Storm Ian, but there are some others moving in pre-market trading here in the U.S. as well, including Carnival Cruise Lines, which, of course, big cruise operator. A lot of those out of Florida. It has had to cancel cruises, alter courses as ports are closed on both sides of the state. So as a result, that stock is down about 2.4%. It is part of that ultimately $7 billion hit that could come to Florida's tourism economy. In terms of other stocks moving down, we already talked about the cool ticker P911. Another ticker here in the U.S., Race, which is Ferrari, is also down. Interesting to see this stock down about 3.7% on the day of Porsche's IPO and trading debut. And finally, I just wanted to check on Apple as well, because of course it sat out the gains we saw in the broader market yesterday due to concern around iPhone demand after that Bloomberg scoop that it has decided to stop its plans to increase production of that new model iPhone. So after losses yesterday, we're seeing that stock adding to losses this morning as it's really just a downward trajectory for broader markets and big tech in particular, Anna. Right now it's off by about 1.3% before the bell.
Okay, we'll keep an eye on that one. Coming up later this hour, we will talk about the ECB and its policy choices ahead. Governing Council member Martin Kazaks joins us live on the programme. And next, Britain's crisis of confidence has been years in the making. More on today's Big Take story next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. So Britain is facing a crisis of confidence from the financial markets, which actually has been years in the making. Today's Big Take looks at the sudden desertion of trust from financial markets after the Truss government revealed its economic plans and the history behind that. Bloomberg's Philip Aldrich joins us now with more. And Philip, we've heard the Prime Minister doubling down on her commitment to the policies that were announced last week. So for anyone who was expecting some sort of U-turn, that's not been the direction of travel so far from the British government. But as I said there in the introduction, these concerns about the UK, long in the making, what's the backstory behind those?
Yeah, so it's all a question of fiscal credibility since the mini-budget on Friday. And that's what spooked markets. They just don't believe the government's word, the Tory party's word any longer. That's the party of sound money, is traditional fiscal credibility compared with the Labour Party. That's been the sort of framework of people's and markets thinking. Of course, what has happened since, effectively, you can look just before the Brexit referendum in 2016, there's been this kind of lackadaisical attitude towards that referendum in Scotland, which was an existential threat to the UK. Then you had sort of a loose connection with the truth in some of the campaign statements during the Brexit referendum, and all of this is starting to erode confidence in the structures of government. And obviously, in Boris Johnson and then went a little further. There was the tax on the judiciary, and we've had questions about experts for quite a while now. And then, of course, Liz Truss in the campaign trail just went, all guns blazing against the experts, talking about the Treasury blob, the institutions of the Bank of England, and the fiscal watchdog in the UK. All of these were kind of raised, just put under question by the government, and that, combined with the sort of fiscal indiscipline in terms of just laying out the tax cut side and not actually saying how we're going to get the money back. So huge amount of borrowing. Yeah. Trust us, guys. We're going to bring the public finances under control. By the time after that sort of 6 years of erosion of confidence, nobody trusted them at the end of it.
Okay, so the trust was not there. Matt, jump in.
Well, I heard Valerie Tytel earlier this morning kind of comparing the Truss economic plan to Reaganomics, and I'm sure that she would be flattered. I'm sure that's what they're aiming for, basically. But the British government, especially post-Brexit, in the midst of this incredible inflation, is in a very different position than the U.S. government was after Volcker had already stopped inflation, when everybody wanted to buy treasuries, and our currency was strong. We had a current account. We had extra money in the current account. So why are they doing this now? It seems like the worst time to make this kind of economic decision.
Right, so the government believes that actually compared with the G7, we're in a relatively strong position because our debt to GDP ratio is below all other G7 members except for Germany. So you start from that relative strength, and as this, as sort of international economics ends up becoming a bit of a sort of competitive game, that's the bedrock of why they think they can push ahead with this kind of, these spending cuts, combined with the other big part of the reforms are supply side changes. So they're deregulating the city. They're going to deregulate all sorts of things from childcare to agriculture. These details were not in the Friday statement, but they are going to be coming out in the next few days. And you combine that with what they're going to where they are going to backtrack a bit is well, they say that it isn't backtracking, but they are finally going to make some statements on what they're going to do on how to find savings to make the budget balance or just come into balance a little bit more. So the combination of evidence of growth reforms, the sort of strength of the debt to GDP ratio, relative strength of debt to GDP ratio, and some of the fiscal, some of the savings that they'll find, that's how they are going to explain, and they hope what they're doing, and they hope that markets are going to start to buy it. That's the aspiration, that kind of confidence will be restored because people will begin to understand the strategy. As you say, Reaganomics starts from a much stronger position, so that's the big question. I mean, are people going to buy it?
Yeah, so are people going to buy into this strategy? We just have to wait quite a long time for the detail, and that seems to be something that the market is concerned about as well. Thank you very much. Thanks for joining us, Philip Aldrich. I should just also point out to Matt, the opposite of a deficit is, of course, a surplus. But sitting here in the UK and the US, as we do, it's easy to forget these words. Philip, thanks very much for joining us. Look for the full Big Take story, NI Big Take, on the Bloomberg terminal, and you can read much more detail about the backdrop to what's been happening in the UK over the past week or so. This is Bloomberg.
The impact of the BOE's bond buying announcement not lasting long. Yields are back up, the dollar is back up, and stocks once again are heading south. We're going to discuss all of that with Hannah Gooch-Peters, Sanlam Investments Global Equity Investment Analyst. She's going to join us next to talk about what is going on with the markets, whether we have seen the peak or the bottom in anything yet. That's coming up next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. British Prime Minister Liz Truss stands by the tax cuts, saying urgent action was needed to get the economy going. Now the question is whether her government can restore credibility with investors. Porsche goes public. Shares of the sports car maker begin trading after Europe's biggest IPO in a decade. And Hurricane Ian has weakened to a tropical storm after pummeling Florida with catastrophic winds and a deadly storm surge. It is one of the costliest storms in US history. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And risk appetite taking another beating then, it seems, Matt, as we're all reminded by some fairly regional German inflation data about our big preoccupation globally around inflation and prices.
Yeah, I mean, huge. I think it was 1.8% month over month, I believe, for North Rhine-Westphalia. So it's a very big state in Germany, and it's a huge number. Nonetheless, I think there are a lot of other factors contributing to the drop in futures this morning. We had a major rally yesterday, almost 2% on the S&P, pushing us back above 3,700 in the cash trade. Now we're down about 0.9% in futures. So still 4 hours away from the open. And of course, the volatility means that these numbers change a lot, sometimes within a matter of minutes, let alone a matter of hours. Nonetheless, risk appetite seems very low. The U.S. 10-year yield rising to 383, 384. So at least, I guess, investors are selling bonds as well and not buying those in preparation of major catastrophic economic consequences today. And you see the Bloomberg Dollar Index continue to climb, 1346. Maybe that's a safe haven aspect at where they're going. We're not quite at a record again on the dollar index, but we are not far away. And then NYMEX crude. Critty was saying earlier, you know, the hurricane in Florida, now a tropical storm, I believe, does mean that far fewer people are driving, so less demand for refined crude products, and as a result, Tex Intermediate is off to $81.99. Kaylee, what do you see in the pre-market?
Well, no surprise, Matt, given that yields are moving back up and risk sentiment, as you and Anna were saying, is not so great this morning. We are seeing big tech stocks in particular dragging down the markets here in the U.S. The likes of Apple, which of course also sat at the gains of yesterday on concerns around iPhone demand after a Bloomberg scoop that it is abandoning its plan to increase production of that iPhone 14. So it is down another 1.4% today. And you have other big tech players down as well. Tesla is down about 1.75%. Both Amazon and Nvidia each down about 1.4%. And as we know, these are huge heavy weightings in the U.S. markets, Anna. So the direction they're going largely is the direction the broader market goes.
Right, so we'll certainly keep an eye on those then, Kailey. Here in Europe, we're caught in a sort of downdraft today, down by 1.3% on European stocks. And I mentioned the German inflation data, even that weaker than anticipated inflation print out of Spain, not enough to counter that sort of mentality that we've got in markets where inflation prints exceed expectations or exceed the previous month. That just reminds us of what we're all dealing with. The UK 10-year yield, a lot of focus on UK assets, of course. Yesterday, it was the 30-year. That's where the Bank of England jumped in and intervened. That got up to more than 5%. That yield is now weaker than that, around the 4 or so. But the 10-year yield also was brought down by that Bank of England action. We were at 4.5% yesterday, so we're not back up to those levels. But as we see the immediate impact of the Bank of England action wearing off a little bit, we do see those yields going back up a little, and we're at 4.15 on the UK 10-year. Now, this is Porsche. Ignore all the words and the letters in front of the name, but this is the Porsche share price listing today.
Don't ignore them.
From our colleague. Don't ignore them. I apologise, Matt. You can
titles.
explain. Excellent. You can explain what they all mean. But this, for the uneducated, I include myself amongst that, Porsche is what we're looking at here. The share price up by 4.2% compared to where it started the day, of course. No closing price from yesterday, but versus where it opened the day, it is up by 4%. Not a bad performance in a market that is falling by 1.2%. And next, this is a different story. This is a clothing retailer aimed at a very different part of the market over here in the UK, down by 7.3%. They are concerned about weakness in the pound. H&M concerned about strength in the dollar. All of those FX market moves then, Matt, coming home to roost for UK retailers and global retailers.
I think you're right that we can shorten the name of Porsche just to Porsche. But to explain, the whole company officially is called Doctor of Engineering Honorary Title Porsche Stock Corporation.
And I am glad you're here.
Well, what I think is strange is if you get an honorary degree, right? I think he was awarded an honorary engineering degree by the University of Vienna in 1917. It's nice, but you don't put that like on your door, right? Because
you wouldn't do that.
No, it's an honorary degree. Anyway, I may misunderstand slightly. There are cultural differences, I'm sure, and also historical differences in honorary degrees. Nonetheless, we should change that to just straight up Porsche AG at the very least. Let's bring in right now Hannah Gooch-Peters, Sanlam Investments Global Equity Investment Analyst, to talk about what we've seen yesterday, a big rally here in the U.S., Hannah, and really relief in the U.K. as well as after the Bank of England stepped in. Does that relief wear off? Do we fade that in today's trade because, nothing's really changed other than the fact that you've got, sort of a mini QE3 back in London?
I think that what yesterday investors were looking towards, which is why we had buoyancy in the market, was a bit of stability, a bit of relief that there was some sort of intervention. But I think reality has hit home again today, and I think that's why we're seeing so much weakness. I mean, ultimately, investors don't want to see this kind of volatility, the extremes, the uncertainty in the markets, and I think that's ultimately why one of the big reasons why we're seeing so much weakness again, particularly in local UK domestic stocks.
Yeah, if we're looking, Hannah, good morning, good to see you. If we're looking for response from UK authorities, is there a role for the Bank of England to do more here in terms of interest rate hikes, or it's just the damage that would do to the housing market means it's not the way to go? What are you expecting to see?
Now, look, ultimately, I'm not an economist, but for me, I've just got to look at the impact it's having on the UK equity market as a whole. And I think that the drawdowns you've seen, particularly in some of those UK domestic stocks, if you look at companies like Taylor Wimpey, like Barratt's, they're very weak again today. And they have seen, if you look in dollar terms, they've seen 60% pullbacks this year. And it's really quite staggering. The sort of turmoil that you're seeing in the UK market is certainly warranting some sort of intervention, some sort of stability. But, ultimately, that's not my call.
Right. I mean, we were talking talking yesterday, and I wonder if you could weigh in on this about whether we should call this a crisis. Clearly, it feels very much like a crisis situation in the UK, and we're seeing crisis policy responses. There was certainly some sort of crisis going on in gilt and pension products yesterday. But is it broadly, globally, is this a crisis, or are we just dealing with a bear market and a very rapid rising interest rate environment? Is that, by its definition, a crisis?
I think what we're dealing with is somewhat more of a natural reset. So what we had, if we go back, and it's so easy to try and forget about this, is the extremes we had in terms of stimulus in the economy during 2020 to deal with the pandemic. I think that we needed a reset. Valuations got so expensive, and now what's happening is that it's almost like a natural environment. We're starting to see the wind come out of this. We're starting to see things come to a more normalized situation in terms of valuations, in terms of where stocks are trading, essentially.
So you think valuations are now at appropriate levels, Hannah, or do you expect to see further compression on that front?
So I think actually, if you look at the S&P 500, for example, and let's take a price to sales ratio, you've come from extreme levels where you were something about 20% above where it was trading in 2000 levels to level with 2000. So that really does put it in perspective. So we've gone from extreme levels to expensive levels. But the good news is if you look into certain subsectors, parts of software, for example, in the US, parts of healthcare technology, you've seen huge pullbacks in certain sectors of very high quality businesses, which is the first time we've seen more reasonable valuations for names like Thermo Fisher, for names like Intuit, Adobe in a number of years, which is starting to actually make us really excited.
Well, let's talk about the earnings part of that earnings multiple equation, Hannah. How much of a deterioration are you expecting in corporate profits, and how does a stronger dollar factor into that?
I think the stronger dollar really is going to have a big impact on earnings going forward. And, you know, for us, looking at names like Elevance Health, for example, or like Fiserv that have very good 100% dollar earnings, particularly has been very beneficial to investors. So over the last 2 years, name like that, like Elevance, for example, healthcare insurance up at 85% in dollars over the last 2 years. And so they're really benefiting. But what you're going to see now as a result of that dollar strength is that pressure on companies with international earnings. And so that's going to start to give you opportunities in companies that have been trading at more expensive valuations. But of course, the market will have a reset as a result.
Earnings expectations really need to come down. Speaking of resets, forecasts really need to come down, right, Hannah? I mean, we're looking at a median forecast of 4,300 for the S&P year end, and we're just over 37.
Yeah, so I think that, like I said, I think we are going to have that reset. I think you're starting to see it. We've seen it in companies like FedEx, for example, like Ford. You're starting to see that reset come through, but it's not really featuring yet. So I think as that comes through, you're going to start to really see profit warnings maybe from some of the bigger parts, the constituents of the index, which will drag down the index overall. So I think we do need to be cautious in terms of overpaying for stocks at this point in time. Like we've had a 20% pullback, but you know we're coming from very elevated levels.
Okay, thanks very much, Hannah. Thanks for joining us. Hannah Gooch-Peters of Sanlam Investments. Coming up on this programme, we will be diving a little further into what's going on in the ECB story. Martins Kazaks, Bank of Latvia governor, joins us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with Nobel laureate Michael Spence. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
Seeing these inflationary pressures, and I don't see when I look at the underlying inflationary pressures that are broadening, I would say my choice would be 75 basis points.
That was ECB Governing Council member Simkus speaking with Bloomberg's Danny Berger earlier today. Let's get a conversation now going with another ECB Council governing member. Martins Kazaks, governor of the Bank of Latvia, is joining us now from the Future of Central Banking Conference in Lithuania. Mr. Kazaks, thank you so much for being here. There is the mechanism to which you get to neutral, the size of the hikes, which apparently broadly there seems to be consensus forming around 75 basis points. But there also is a question of where exactly neutral is. Where is it for you, and do you think you will get there by the end of this year?
Well, there are various estimates. Of course, this is unobservable. It's like a Yeti. Nobody has ever seen it. But the estimates are in the range of 1 to 2%, the typically most used. So I think by the end of this year, we would get to the upper side of this range. So 75 basis points is a big step, but I think that would be appropriate at the current moment.
Okay, and you think that for October, good to speak to you, Governor. You've said that at the moment you'd be closer to 75 basis points. What is the best argument that you can use to take other members of the Governing Council with you in that? Because others we've spoken to this morning have been talking about lower numbers than 75.
I think we are still providing the accommodation to the economy. The rates are still in the accommodative part of the range. So removing that would be necessary at the moment. And of course, currently the distance to the interest rates that would ensure 2% inflation over medium term is still relatively wide. So we can take big step to speed this up. So the front-loading story, bigger step story, I think still plays out. And later on, when we approach higher levels of interest rates, of course, when we have the two-sided effects of tightening too much or tightening too little, then the steps would become smaller and more cautious. But we are not there yet.
Okay, and how aggressive should other measures be as well, Martins? I mean, we're looking at CPI, I know in Latvia, some of the highest levels around the Eurozone, 21.5%. But of course, the policy must be set for the whole Eurozone. How does quantitative tightening play in here? We've heard what Christine Lagarde, President Lagarde thinks about when QT discussions should start. When do you think those QT discussions should begin?
Well, internally, as everybody, we should do the homework, so we should discuss now, but it doesn't mean that we should communicate this already as a step that we make. I think at the current juncture, moving with interest rates, hiking the rates, is a more appropriate step. And then towards the end of the year, of course, the possibility of starting QT elements would be more ripe. But by all means, we would need to move to the balance sheet instruments as well, because of course we will want to work more with the long end of the yield curve as well.
You see pressure, though, to Anna's point. You know, other parts of Europe are going to have trouble with higher rates. Italy, for example, facing renewed pressure in its bond market after the election results over the last weekend. Does this mean you're going to deploy the TPI, the transmission protection instrument?
TPI is not meant for for all kinds of volatilities in the market. It has certain conditions for it to be turned on. And of course, if there will be need in the financial markets, we will consider it. But political changes that affect the policies does not necessarily qualify as market volatility, which is not fundamentals based. So we always have these backstop instruments available, but it is not that they will be employed in every and each case. And if you currently look at the financial markets and coming back to the rate increases, we've seen that the 50 basis points, 75 basis points were taken by the markets relatively confidently. And that also provides confidence to me that 75 basis points would be an appropriate choice for our next meeting.
But is there a spread over bonds that makes you that triggers the TPI if you're looking at 300 basis points or 4?
We do not have.
No.
We do not have specific spread levels that would trigger specific instruments. And let me remind you that we have at least 3 instruments in this area. One is PEP, reinvestment flexibility, and then we have your mentioned TPI, but we also have the OMT.
Okay, so clearly you are watching spreads and the bond market. Let's talk about foreign exchange as well. How concerned are you about the depreciation of the euro?
Of course, weak euro does not help with inflation because it prices inflation into longer run through energy prices and all other imports. So it is a problem. But at the same time, when supply side gets fixed, when supply chains improve and get back to normal levels, weaker euro may also help as a hedge against deeper inflation. So yes, it does worry me. Of course, we do not have specific exchange rate levels that we would target, but this does come into the inflation forecast, and weak euro does increase inflation. That is very true.
Governor, I'm sitting here in the UK, and clearly there's a lot of turmoil in UK assets at this point. I wonder if you're watching that situation, if it teaches us anything useful about exits from easy monetary policy, about QT, or about fiscal actors and the types of policy they should introduce right now.
By all means, it teaches us a lot. It shows us that doing homework is very important before we move with specific instruments. Understanding the interlinkages is extremely important. It's also extremely important for the central bank to move in when it's necessary for financial stability reasons. But at the same time, of course, it also tells us a lot about the policy mix. What is the efficient policy mix? What is the role of fiscal policy? What's the role of the monetary policy? And of course, there's macroprudential, and I would also say structural policies. And in the past years, when we saw that the COVID-19 crisis, fiscal policy and monetary policy going by and large hand in hand, and there most likely is some blurring of the lines. What is the task of each of the policies? So I think it very clearly says that independence of the central bank is paramount, and clear mandate is extremely important to deliver efficient policy mix that can carry us through different volatilities in the markets and in the economy.
All right, Mr. Kazaks, we have to leave it there, but thank you so much for giving us some of your time this morning. That's Martins Kazaks, Bank of Latvia Governor and ECB Governing Council member. Thank you so much. We do want to quickly touch on some breaking news out of China. China's state banks have been told to stock up for yuan intervention. This is according to Reuters. And off the back of that headline, we are seeing a massive move in the offshore yuan. At one point, it was north of 7.21 against the dollar. It is now back down, strengthening to 7.15, and the dollar is heading back toward the lows of the session as well. Intervention seems to be the story around the world. This is Bloomberg.
Shares of Porsche began trading today after Europe's largest IPO in a decade. Lutz Meschke, chief financial officer at Porsche, spoke with Bloomberg's Tom McKenzie.
We have successfully mastered one of the biggest, largest IPOs in Europe ever. And therefore we are very proud. And I would like to say thank you to our entire team whose work has ensured that we can stand here today.
And I cast my mind's eye back to 2018, 4 years ago. And you came out and said, maybe we should IPO Porsche with a market cap of around 80 billion euros. There was a bit of pushback internally, externally, when you came out with that. Do you feel vindicated?
Yeah, absolutely. It was a tough fight over 4 years now, but we succeeded. Now we can stand here. We are very happy, and we see further potential for the future with our strong brand.
How are you going to cooperate between the parent company, Volkswagen, and Porsche? You have a little bit more independence now, but we know historically there's been tension between the brands and the portfolio. How are you going to cooperate and make sure there are synergies that work for you at Porsche?
Yeah, we have negotiated an industrial cooperation contract with VW, and there's clearly regulated that Porsche has 100% autonomy in future. The Porsche board will decide in future, completely independent from VW. And that's a great situation for us. We want to unlock Porsche's full potential, of course, but we have also the possibility in future to work together with the VW group brands where beneficial for Porsche. That's the case when it comes to sharing technologies like the Taycan used also for the Audi e-tron GT, pooling emissions, bundling purchasing volumes, or also using production capacities like the Cayenne in Bratislava.
Okay, and talking about production, so you have the factories in Germany, you're producing in Germany, you're producing in Slovakia. Where do you build out the factories of the future for Porsche?
Yeah, hopefully in Germany and in Slovakia. There's no other plan.
That's Liz Smetchka, the CFO of Porsche, speaking to Bloomberg's Tom McKenzie. Keep an eye on metals prices. The LME is consulting on a possible ban on Russian metals. That is sending some of those metals prices higher this morning here in London. So as we hand over into New York, keep an eye on that. That is it for the early edition. More surveillance is ahead. Tom, John and Lisa will take you through the latest market moves. This is Bloomberg.